conforming loan limit is the maximum size of mortgage that can be purchased by the government-sponsored enterprise, also known as the GSE, and these are such as Fannie Mae and Freddie Mac. These limits are set by the Federal Housing Finance Agency, which is also known as the FHFA, and are based on the average home prices in the area. The purpose of these limits is to ensure that the GSE only purchases mortgages on homes that are considered to be affordable for most borrowers. These are the current loan limits for your standard county. What you're thinking. But Roxanne, most of the homes in my area are going much higher than this. Well, then you might live in what's known as a high balanced area. Local to my market, I am currently in Riverside County, so the high balanced areas would be San Diego County, Orange County, LA County. Now, high balance loan limits refers to a maximum size of a mortgage that can be purchased by government-sponsored enterprise, GSE, in an area with higher housing prices. These limits, again, are set by the FHFA and are typically higher than your standard conforming limits. So for example, in 2020, the standard conforming limit for a single family home in most areas of the United States was $510,400. The high balance loan limits went as high as $765,600. The purpose of these higher limits is to make it possible for buyers to purchase in high cost areas in order to obtain financing for a more expensive home. Because when you stay in the conforming or high balance limits, you will have a lower down payment, such as 3 to 5%, as opposed to the 10 to 20% for jumbo loans. Another reason is that there is low to no reserve requirements on the conforming and high balance limits, whereas jumbo loans, you will need a minimum of 12 to 24 months in reserves. This is an example of the highest loan limits in the country. Keep in mind, your loan limit will be based on your county. For your credit challenged borrowers, FHA loan limits work the same as the conforming and the non-conforming limits, but the limits are completely different. FHA limits are the maximum loan limits that the Federal Housing Administration will insure. The FHA sets these limits based on the cost of living for different parts of the country, and they're generally calculated as a percentage of the median home price for the area. These loan limits are designed to help make home ownership more affordable for low and moderate income families. They have higher limits for higher priced areas as well, just like the conforming and high balance limits. So here are the loan limits for FHA and FHA high balance. So just to recap, the reason why you want to stay in the conforming limits is because you would qualify for a lower down payment, it would have less reserve requirements, and typically it would be a lower interest rate or have much less adjustments to the rate by staying within your conforming limits. So next year or in the future, when you see your loan officers or realtors that are so happy that loan limits have increased, you'll now know why and what that means.